kind of taking a look at where do you go from here? Where are the opportunities? How are buyers feeling? How are sellers feeling? You know, high level. We're going to go through all of it.
Yeah,
So.
love it. Where do you want to start? We can also talk about different asset classes as well, right? I know this is, again, we talk majority about multifam, so let's start there. I think, yeah, it's a true definition of a buyer's market.
Welcome back to REI Hot Seat. Andrew Hines with Jacob Campanaro
Hello.
again. And we're going to be talking market update. We're going to talk high level, what opportunities exist right now, given what's been going on. Obviously, we had that rate cut cycle. Some believe that that's done now.
Well, last couple of held true.
Yeah, they're obviously stopping. I mean, there's obviously people on both sides of that fence. Some people saying they should continue cutting, but you know, here it is. So knowing that, knowing where we've come from, you know, the fact that there's been a downward trend in pricing, you know, kind of taking a look at where do you go from here? Where are the opportunities? How are buyers feeling? How are sellers feeling? You know, high level. We're gonna go through all of it.
Yeah, love it. Where do you want to start?
That's a good question. Let's see here. Okay, let's just talk interest rates.
Okay.
What are we now? Like 3 months since the last cut, or even 4?
No, more. Yeah, about 4.
4, yeah. People were thinking party. I mean, the U.S. is signaling cut. That's probably coming this fall, but they never did any cutting. So what we've seen, obviously, in the last 3 years is just a steady downward trend in the pricing, right?
Yes.
And mainly because of the massive jack in interest rates in 2022. So knowing that, I mean, we've talked recently that buyers are having a lot of fun right now.
Yep.
Buyers are sort of writing their terms a little bit better than usual, and sellers are having to get a little bit more flexible.
Yeah.
What are you seeing right now? Like, you know, does that hold true across the board or not everywhere? You know, give us high level.
Yeah, we can also talk about different asset classes as well, right? I know this is, again, we talk majority about multifam, so let's start there. I think, yeah, it's a true definition of a buyer's market. Dave and I were just chatting about this the other day. There's, you know, you can really dictate terms as a agent. On the selling side, we've lost a lot of our leverage, right? Nobody seems to be in a huge rush. Buyers are very, well, you know, here it is, take it or leave it kind of thing, which is fantastic for them. So yeah, we've seen prices continue to drive down. Over the summer, the past 2 months, inventory's actually been a bit tight. So we found a lot got sold. The stuff that the low-hanging fruit was sold. The people that needed to sell sold, because there are buyers out there. And inventory actually started to dry up a little bit. Again, this is kind of southwestern Ontario, tertiary markets. You know, Toronto, we have a couple buyers for right now, so we've been looking a little bit there, but more outside like we normally do. And then so now we're coming into fall, and it's a great time to do this podcast. And I actually want to do a follow-up in a month from now, because I do think the fall market's going to be decent.
Well, it's tough to be slower than August in general, right?
Exactly.
Nobody wants to do anything in August, right?
Exactly. So I'm, hoping September comes around, we'll see some inventory come back to market. I'm holding inventory right now. There is stuff that are going to be launching in September, because it doesn't really make sense to bring it out right now. There's just not as many eyes on it as there should be, and you're already in a tough market, right? So play with it.
So seller sentiment right now is still,
it's bleak.
Bleak, yeah.
Right, it's seller sentiment.
Like if you got to sell, you got to sell. But
there's some people out there that are trying to reach for the stars. It's just not going to go.
Yeah.
Right. The buyers are really dictating the terms. So
I think now more than ever, that means write your plan as a seller. Like, how's the buyer's return look? How would the buyer do this and make it make sense?
Yep.
And if you can know that, then you have a better chance of selling it.
And that's it, right? Like, so that's how we've been trying to structure all of our sales lately. Is we reverse engineer it. We say, okay, as a buyer, what would I need to do to get this deal done, right? And it's funny, like every time I argue with Dave about this stuff, I'm like, no, like, that's just your buyer.
Yeah.
And then it comes true. It's like, no, you're right. That is just the buyer. It needs to be a deal, right? You need to have a good asset. You need to have a way to acquire it creatively, and there needs to be something else thrown in just to make it exciting, right? Or else you'll go buy the other deal.
Like there's got to be a win-win. You got to be willing to work with them and all that.
No, it's not even a win-win. You just got to have a win for the buyer.
Yeah.
Or else you're not getting an offer.
You as a seller don't need to win.
Yeah.
No, I mean, obviously you want to, but you got to sell. You got to sell.
Yeah, and that's the thing. And like, at least the nice part is that priced right, you are selling. There is action in the market. The biggest challenge we're having is just what is that price, right? And sellers not understanding that. And
there are always buyers. They just want a deal. So
that's it.
So you got everybody who's priced at what median sale price was 2 months ago, thinking that's still now. I mean, my preference is, as a seller, I want to be below that because I want to get the people who are looking for a deal.
And that's been the challenge. Is a lot of people have been chasing the market down because we're still continuing to come down instead of preempting, and that's why stuff has been sitting around. So it's going to be interesting to see what happens. Like, if interest rate cuts come, it just helps push those mortgages a little bit more. You know, maybe you can get a little more for your building. I don't know. Like, I don't see that happening dramatically where we're going to notice it, but a rate decrease would be nice on the next go around for sure. Right? Hoping to see that.
Well, let's just see here. Canadian interest rate forecast. Let's see. Is anybody saying that we're going to come down? Okay, so some people are expecting another quarter point. Yeah. I mean, there could very well be another couple. The next scheduled one is September 17th.
Yeah.
So,
and again, a quarter point does what?
Not a lot. It also does not affect directly the bond market. It doesn't change the fixed rates.
So, and that's the thing when we're watching those rates. Like, sure, that's going to help me on my house because I got into a variable rate. Thank you. In terms of multifam, no, it's the bonds. We're following the bonds. Those have been. They were pretty low at one point. They kind of came back up. They've been fairly steady.
Yeah.
Right?
Yeah, they'll come down for a bit. They'll come down for a bit, and then something will happen. They'll go back up.
But they haven't seen anything too crazy there. Like, it has been chugging along.
It's like anything happens, like something happens in the Middle East, something where their concern is created. A whole bunch of people want to buy bonds. That's the sentiment anyway, or the theory. So then it drives up the yield because a whole bunch of people buying the bonds drive down the price of the bond.
Correct.
Yeah.
Correct. So that's what we're seeing there. Like, again, I think as a buyer, get in this market now. It's a good time.
Yeah. I mean, what do you say to the buyer though, saying, well, what if it keeps going down?
No, but that's the thing. There's always what ifs, right? And it's like, okay, so why don't you buy now and build in the what if into your price?
Yeah.
Right. But what's your what if? Like, you also have to be a realistic buyer.
Yeah.
Right. Like, that's the other thing is I've seen offers land on my desk where I'm like, okay, like, I know I don't have a ton of leverage in this market.
Yeah.
But like, this is so far gone from reality. I don't know what to tell you.
Well, and I think that, like, to your point, you price in the what ifs. You buy it in such a way that you don't need to sell in 5 years, 10 years.
Exactly.
We've talked about this a couple of times. Like, nominally, pricing has always come back within 10 years in recent history. Doesn't mean it always will, but it has. That's been a fairly consistent thing.
But again, I think it boils down to, what are you buying? Why are you buying? What is the strategy? Like, we're still not seeing fix and flips right now in the multifam world like we used to.
Yeah, no one's going in to do that.
There's people doing it. There are, but we're not seeing it as much, right? We're seeing more people just saying, no, rather than trying to buy a fix and flip and have high risk, high reward, I'm just going to go into something that I know I can hold for 10 years, but guess what? I can still flip it to myself, right?
Yeah.
Like, I can refinance it in X amount of years. I can do this. I can, like, so
more turnkey.
I feel there's more turnkey transactions happening. Again, if correct me if I'm wrong, but that's at least what I've been seeing.
Well, you would know better. I mean, you're
I'm talking to the audience.
Leave some comments. Yeah, obviously, guys, we're more than curious to see what your thoughts are, what you're seeing. Feel free to share them in the comments below.
Yep.
We always want to hear. So the next thought is, knowing interest rates may come down more, sure, that could help. Because obviously it's an inverse correlation. As interest rates come down, prices actually should go back up. It's just we're still suffering the effects of the original interest rate hikes.
Yeah.
That they're playing out. And as I said, right from when they started, it's going to take a long time for this to play out. When they started jacking their rates, I'm like, this is irresponsible. Yeah. I actually had somebody invite me on CTV. I went on CTV and I basically just said, hey, it's going to play out over a long time.
Yeah.
But, and it still is, right? How many years later are we still seeing the effects of it? And, might still keep going. I suspect it's kind of going to start to level off. But, time will tell. So going beyond that, what do you do as a buyer in this market and you're trying to put yourself in a position where you're gonna benefit the most? Do you pivot asset class? Do you look at different types of stuff?
Yeah.
Like, what's the angle? Where do you see opportunity?
Yeah, so I think if you have the luxury of pivoting in asset class, then that's obviously something we can start with, right? That's kind of the biggest jump or difference, right? What is, like, that's the way I've always looked at it, and that's actually how Andrew and I ended up with our campground, right? We always looked at it and said, what is the best deal I can get in the market right now? What is the most suppressed asset class in this market, right? So office space, very suppressed, right? You know, office was bad because of everything we went through, but now it's summer and right where we are with the economy. And so office is a good asset class to be looking at. It's just, what are you going to do with it? Yeah. Right? You got to get office at such a good price that it's like, okay, things can keep coming down for another couple of years. Are they going to come back up? So with office, I always like to say, hey, well, what's the plan? Is it conversion? You tearing it down and doing industrial? So that one's kind of iffy. And again, the barrier entry is higher. You're not getting great loan to value. So that's one, right? We can look at that. You know,
the industrial stuff you're talking about, what is like the industrial with the office?
Yeah, like industrial starting to come down as well, which is the challenge. Right, it's kind of on the downswing right now. Like even with industrial, I kind of want to wait and see what happens because it's coming down quite rapidly.
Why do you think? Because multifamily is obviously one of those other ones that we were just talking off air. It's kind of saturated, right?
Yep.
Multifamily, is it all just the MLI Select program, like the purpose built? Like, because things are still being built. Like people are not building new homes for people. They're building purpose-built rentals. That's what's being built right now.
Yeah, like multifam has always been a popular investment, and it always has so many people's eyes on it because of the low barrier to entry. Right? Because we always look at it, we say, what is the biggest challenge with people coming into the market? And it is barrier to entry. It's capital.
Yeah,
right?
Sure.
How much cash do you have to buy these buildings? And when you can look at 95%, you know, MLI style stuff, you know, now that's kind of gone, but you can still get 80, 85%.
No, you still can get 95.
You can. It's just more difficult.
Yeah, it's not just efficiency, right? You have
Correct.
to do,
you got to do a bunch
accessibility
of
or something.
But that's what gets people in the door for those types of asset class. So that's what's very, very attractive about multifam and why so many people are going into it. In combination, the market's coming down in that as well. So as a buyer, get your story, what you want to do, right? Are we buying in Toronto? Are we buying in tertiary markets? Why are we buying multifamily? Let's figure out your profile. That's number one. And then, I would take advantage of this market and look in areas that historically you haven't been able to buy in. Again, like Toronto.
And how are you approaching sellers to take advantage? Does it make sense to still try and get seller finance, or is this a market where you're negotiating? I mean, specifically on the multifam, you just want to negotiate straight to CMHC kind of stuff.
Yeah, like again, right? You have the power of time, right? And so I was actually talking to a client about this the other day because he was like, "Oh man, we can get super creative with this deal," and I was like, "Okay," and I was like, "But are you paying a premium to get super creative?" And he goes, "Yeah," and I said, "Honestly, you're better off just to go to him with a lower offer and say, give me the time to go get the CMHC and figure this out."
Yeah,
right, because they're gonna let you do that.
Yeah, you got to keep it simple.
They're going to give you that time to let you go do what you want to do. You don't have to get crazy creative like we did in the past. Now, if you can get crazy creative and get an awesome deal, amazing, right? Why not?
Yeah.
But we were doing a lot of deals back in the day where we had to get all these creative ideas, a little bit of ETB, some of this, a little bit of that, just to make these things work because of where the prices were. And I think there's really good opportunity for people that do have a bit of cash right now to get some really good steals in the market. So look at markets that you weren't able to get into. Yeah. And structure your deals for long-term success and ask for the time.
The other thing I would say is, and it will require creativity, but our camp, you brought it up, that's a perfect example. Like we saw the ability to add and scale within that like drastically.
Yep.
And we're still at around 30 sites used out of 70 approved. And, just the things that we can do there with adding amenities areas to boost revenue. Like there's so many things you can do to boost the top line, whereas there's so much of the real estate out there, there's nothing you can do.
Yep.
Like there's the price per square foot rent on your commercial, like the one we did last week. And then there's what will a 3-bed rent for? What will a 2-bed rent for?
Yeah.
If you can find something where there's an opportunity, like maybe there's extra land, or maybe there's a building, an outbuilding that could be converted into something, or maybe you've got an ability to convert storage lockers into the basement where they'll generate revenue. Like, I think it's like get creative, know what you'd need in general to take advantage of some opportunities.
Yeah.
Like I always used to look for real estate with extra land because I just figured, hey, that's going to be worth something one day. You're going to be able to do something with it.
No, and that's a great idea, right? And my one note to that, Andrew, is like when people are running the numbers on these deals, I want them to kind of leave that whole creative side out of it though right now. Mm-hmm. Stay with me on this, right? Because it's like...
the numbers at face value got to make sense.
The numbers at face value have to make sense. And again, a lot of people are coming to us thinking of the past where they said, oh man, like, this building would work so well if I convert this unit, or if I add laundry, or if I do this, or if I do that. And it's like, well, does it work just now? Mm-hmm. Right? Because if it doesn't, I wouldn't buy it.
Right. Yeah. It needs to work out.
Imagine you do absolutely nothing for the next couple of years. You buy it, you put your down payment, and you do absolutely nothing. Does it work? Are you going to cash flow? Real cash flow? And then, if you feel one day, hey, I'm going to go add that unit now. That's all just on top. Right, that's the way people are looking at
like
deals.
you got to look at it as like a gravy. Yeah, like you need it to make sense as it is. And I've always said this: make sense as it is, but then give yourself the ability to increase revenue down the road.
And that was the biggest challenge we faced in the last few years. And I think that's why a lot of people are hurting right now, is because they were buying not based off the face value as is. They were buying based off of what it could be. Right? They were baking in that value. And listen, I sold a lot of buildings that way. Like, I'm a seller's agent, right? So it's like, as a seller, that was great. You say, great, I'm going to add, my building has value that's not even there yet. But now we have the ability to do so. Be careful, look at it as is, and then go, cool, but I can also do that.
Yeah.
Right? That's my biggest piece of advice right now.
Side note and just random, but are wholesalers still a thing in Canada? I feel like all the wholesaler, maybe the lists I just unsubscribed from them, but I don't feel like it's nearly what it was.
I've definitely seen a lot less.
Yeah.
There are some out there, right? I do get the emails still once in a while, but very, very far and few in between, and I actually don't know what happened. I'm sure if I sat down and gave it some thought, like, I could figure out why.
I think that it was the adjustment of expectation was just too much because of the swing that Ontario had, right? Because what's Ontario down from the peak now? Like, in just residential, like 30%?
I think we're 30%, yeah.
Yeah, I think that's a heavier swing than most places, throughout the U.S. and whatever. Yeah. Like, U.S., you still got wholesalers, but here I think the swing was just too much. Like, you're talking to buyers or sellers who think that their building's worth 800 when the market says it's worth 600. You as a wholesaler need to get it for 4. Right. I think that killed a lot of them.
Just becomes difficult. Yeah.
Not to say you couldn't have done it or kept doing it.
Well, there's people doing it.
Yeah, exactly. You just have to hit harder and be more consistent.
There's people doing it. And again, I also think, what's your expectation of how much are you going to make off a wholesale, right? Like, there was some people making hundreds of thousands on a single family bungalow. And it's like, whoa. Right?
I mean, I think the typical wholesaler MO is like, take something, price it at pretty much what it's worth retail, and then position it as a wholesale. Say you're getting such a great deal. I think that was pretty darn common. Yeah. And then sell it because people were just in a frenzy to buy real estate, and we're baking in everything that they could turn it into with a reno. When the fix and flip angle sort of died a little bit because you couldn't bank on the real estate market going up, I guess that kind of answers where the wholesalers went. Yep. Because the fix and flip angle didn't really make sense anymore.
No, and I think because that was the big wholesale move, right? Was the buy the bungalow, convert it to a duplex, and sell it. Like, that was like the big one, right? So.
Or convert it to a duplex and refinance it,
right?
Which both banked on the value going up, like the market continuing to appreciate really to make it work. Because I did multiple renovations where if the market hadn't have gone up while I was doing it, I'd say at least one for sure, call it maybe 2. I would have been in the red on them. Yeah. So the market saved me like it saved lots of people. Yep. And I think that's being that's gone, wholesalers gone.
Yeah, that's fair.
They'll come back, I think, but
I think, what's your predictions, Andrew, for next, call it, quarter? Right? How do we look until the end of the year?
I think it's like, and I think I've broken a record on this. I just think we're going to be very stagnant. Like, I don't really take too seriously the declines in price we're seeing now because I think that comes with fluctuation. Yep. I think as the interest rates, truly our economy is going to show that it sucks. The Canadian economy is going to show very clearly that it sucks. Like, immigration is stopped, so the economic growth, even at a macro scale, is going to go away. Never mind the GDP per capita that's been abysmal for 8-9 years now. Yeah. It's just going to it's going to take a little time for that all to play out. But then I suspect what you would typically see is more rate cuts. Yeah. So until we get to the bottom of what's called the neutral rate, which is when the rate is not stimulating nor suppressing the economy,
right?
Which I believe the bottom of the neutral rate's 2 or just under 2, okay. 1 3/4. So we probably stabilize there, and then there's a lot of stagnation, right? Until Canada can innovate, there needs to be response to the stupidity that's happened so far, right? Okay, this wasn't working. We need to do the following things to lower taxes. We need to do the following things to remove red tape, de-government, a lot of the industries and let people go back to work.
Yeah, and what do you, okay, noted on that. And then what's your thoughts on the housing crisis, right? Shifting from kind of commercial investment, let's just talk more relevant stuff, because we hear that a lot, right? Everybody hears housing crisis. What is that to you, and what? Yeah, how does that get fixed?
I don't think it does.
If there even is a housing crisis.
Yeah, you're literally not building any new construction units. I think what really happens is people lower their standards. That's the true response. The quality of living in Canada will go down. You'll have people who share, multiple families sharing one rental unit, families moving back in with their parents. You're just going to see all of that. That's where those people all go.
But when people say housing crisis, because I look at the market and say vacancy for apartment rentals very high right now. It's starting to compress a little bit again, which is good. Yeah. But we look at Toronto, it was 3-4%. Hamilton right now is 3 and something.
But it's not that there aren't people to fill those units. It's just that they're looking at the opportunity cost. They live with their parents for nothing, or they could go downtown Toronto and they're just saying that doesn't make sense. I got to stay here.
Right. Yeah. So is there a housing crisis then?
I don't think so. No. Not really.
Sorry. I'm going in circles now. But
in one sense, you're going to see homeless populations tick up, all that stuff. And that's just that is literally all the COVID policy playing out 5 years later. Everything that happened back then is literally wholly responsible for what we see now. Yeah. So you're going to see some of that. Canada can get back into an amazing economy. It is possible. It just takes smart decisions made at a high level. So who knows? I can't predict that. I know it's a good idea to diversify, we'll say, but I still think obviously people won't put up with nonsense forever. Policies will change, things come back, and then of course as a buyer, buy stuff where you got a 10-year plan. Hey, I'm good for 10 years. This will cash flow. We'll ride the wave, and knowing nominally usually things come back in 10 years. Yep. Not advice, but that is typically what we've seen.
I like it.
Did I ramble too much?
No, I think that was good. Yeah.
Cool. Yeah, we haven't done an episode like this in a while, so figured we would.
That's great. I think I'd love to do, again, more free-form content, more, even bring some guests in, start talking with guests. Yeah. There's lots we can do. I know people love the deal analysis because I think
we got a good vibe going on. Yeah. We got a good vibe going on when it's me, you, and Dave. A mix of the free form with the deal analysis. Yeah.
I know Dave always wants to stick to the deals, and I'm always bombing questions.
I like that
getting
mix.
him off his flow.
I like that mix. Yeah, that's good. So I'd love to do more of that. I agree with you. Maybe bring in some guests, some industry experts. I think that'd be a great ad.
Love it.
Somebody who can come speak on the mortgages side, or maybe we'll get, what's his name? That CIBC economics.
Benjamin Tall?
Benjamin Tall. Maybe Benjamin Tall wants to come
up. We'll get him to sit down in the studio with us.
Yeah. Maybe he'll join him by Zoom.
Yeah, love it.
Anyways, okay, guys, if you enjoyed this episode, make sure you enter your information in the show notes below this episode, or if you're on YouTube, you can enter it just below the episode in the description. That gets you on the REI Hot Seat Insiders list, and you get deals of the week. You'll get access to Jake and the team to have a call and bounce some ideas off of them. So, anyways, that sums it up.
Let's do it.
Cool.
Thank you.
All right, thanks. See you again next week.